Welcome. I'm your host, Henri Arslanian, and welcome to this other episode of the Future of Money podcast, where we're going to talk about the exciting world of crypto asset management, and in particular, the role of ETFs in the broader world of crypto. Before I introduce my guests, welcome to everybody who's listening to the show. Thank you very much for making this podcast such a success. We're in over 140 countries right now. The podcast is growing literally every week, and a big thank you to each and every one of you for making this possible. Again, my goal with this podcast is very simple. It's to go deep in some of the biggest ideas, trends, and developments we're seeing in the field of crypto, and hopefully empower you with this information, and then let you make your own decisions on what their impact can be on the future of finance and on the future of money. And to do this, I invite each week one of the leading figures of the global crypto community to have this one-on-one conversation amongst crypto aficionados and discuss some of these topics. My guest today is somebody very special, Matt Hougan, who's the CIO of Bitwise Asset Management. By the way, one thing you may not know about Matt, and hope you guys are sitting tight, is that before he got into the ETF and the asset management business, in his younger days, he used to be a minor league baseball mascot. Yes, you heard me well. With the Portland minor AA affiliate of the Marlins, would now actually an affiliate of the Red Sox. But believe it or not, he was wearing a 9-foot seal costume. Man, I have to say, I've asked this question to many people in the crypto industry, and this is probably the most interesting fun fact about somebody. Matt, great to have you with us today on the Future of Money podcast.
Thanks for having me. Really excited to be here. Always fun to follow the traditional career path, minor league baseball mascot, ETFs, crypto, right? I think that's well trod. Congrats on the podcast. Amazing success, huge fan, and really a delight to be invited. So I'm excited for our conversation.
Awesome, Matt. So we're going to talk today about a lot of topics of active management, passive management, about ETFs. I know a lot of big chunk of our audience is really in the allocator side, a lot in the institutional side. So I think we're going to discuss a lot of topics that are quite relevant. But before we go really in all this, do you mind sharing with the audience a bit about your personal background, Matt? And what it is, how come you ended up in crypto? We definitely need to cover the mascot story, but also how about a bit more about Bitwise as well, and what are you guys doing in this space as well?
Yeah, sure. Absolutely. I'd love to. Started out my career as a baseball mascot, doing the YMCA dance and the electric slide to the joys of thousands of baseball fans. I entered the finance industry really through ETFs. I was an early member and eventually CEO of a company called ETF.com, which created the first ETF rating system, which now powers all of FactSet's ETF data, largest ETF conference, largest ETF media site. And I ran that business for 12 years and eventually sold it. And here's one interesting tie to crypto. Today, we think of ETFs as like the mother's milk of investing. Everyone loves them, low cost, they're fantastic. But early, everyone was skeptical of ETFs. There were actual congressional hearings about ETFs, whether they were going to destroy American entrepreneurialism. People labeled them weapons of mass financial destruction. There are risks in the bond market. People were very skeptical. And so I've seen a technology that is new, different, but more efficient and more effective go from outside the mainstream to a big part of the mainstream. And so after I sold ETF.com and didn't earn out, I looked around for the next big space where I saw a massive disruptive technology that I thought the market didn't understand properly. And boy, was that true of crypto, right? This is 2016, 2017, 2018, in the very early days of institutions starting to think about crypto. And it was the land of hype and hyperbole. You had people saying crypto was the best thing since sliced bread, and you had people saying it was going to destroy the world. But if you understood the technology, you understood it was a fundamental disruption to how money and property would move in the future, and that it had an inevitable path toward the mainstream. And so it seemed like the only place for me to go after selling the ETF business. And I was really excited to land at Bitwise, which was the first company to create a crypto index fund, is the largest crypto index fund manager in the world. And I thought had a big role to play in bringing professional investors into crypto. And that's what we've been working on for the past few years. And so far, so good. We've had a little bit of success.
Well, I think you're very humble on that perspective. I mean, you guys have obviously have a pretty interesting market share as well, and size as well, of assets as well. So well done. I think, Matt, you guys have been really actually a pioneer in the space actually when it comes to crypto and indexes actually. Let's talk about ETFs. Obviously, you mentioned you've been in ETFs now for a while. What is the role you think ETFs will have on the future of crypto? Do you think they will enable a lot of the mass market, retail market to access the ecosystem, or do you think they'll kind of legitimize the space and they'll have a more big catalyst impact on the growth of the ecosystem?
Yeah, both. Can I say both? I think they will dramatically legitimize the space, and they will onboard primarily financial advisors, hedge funds, and institutional investors into the crypto market. The way I think about it is twofold. If I'm a professional investor, let's say I'm a financial advisor, financial advisors control over $10 trillion in wealth. So this is a massive market. And I'm going to put someone into crypto. Right now, it's hard. Maybe I use a private placement. Maybe I use something like GBTC or Bitwise's version of that, our index ticker BITW that can trade at premiums or discounts. Maybe I try to wire it through a Coinbase wallet. It's a big challenge. It doesn't flow through to my reporting software. And I'm sticking my neck out on something that isn't yet mainstream. Once I can buy crypto in an ETF package, that conversation becomes much easier. And look, crypto has gone from zero to a $2 trillion asset class, primarily on the backs of retail investors. But we all know that there's more money in the institutional crowd and more money in the financial advisor crowd. And once an ETF makes that possible, they're going to come in droves. And we actually have an example of this. People have been investing in gold for 5,000 years. People have been talking about gold's role in a portfolio for hundreds of years. And before the advent of the first gold ETF, you could gain access to gold. You could buy gold bars, you could buy gold coins, you could buy gold miners, just like you can buy crypto on an exchange, you could buy crypto at mining companies. But most people didn't. And once GLD launched, $80 billion flowed into it over a handful of years. Why? Because it became push button easy, it fit into reporting software, and it legitimized it in the eyes of investors as a primary institutional asset class. ETFs are going to do the same thing. I think they're going to catalyze the next major bull market in crypto. And I think we're going to get there. I don't know when exactly, but I think, probably in the next 12 months in the US. And I think we're definitely closer than we've ever been before.
So actually, when you look at it, say from a time frame perspective, currently we have a cash settled Bitcoin futures ETFs. What do you think will be the catalyst for us to have physical backed Bitcoin ETFs?
Yeah, it's like the tale of two cities when you talk to crypto people. Some people see the SEC as never doing it, right? They haven't done it since the first ETF was filed in 2013. They've been obstinate and difficult and blocked us at every turn. They've rejected maybe 20 applications. I actually take a different view. If you back up over the last year, objectively, what's happened in the ETF realm in the US? There were no crypto ETFs. And then we got the first crypto equity ETF, the first ETF with the word crypto in its name, which actually was a Bitwise product. And then we got the first Bitcoin futures ETF. And now recently we got a 1933 Act Bitcoin futures ETF. The first one is in the 1940 Act. Now we're in the 1933 Act. I think the SEC is going through a crawl, walk, run phase. And if you follow that pattern, it leads to the approval of a spot Bitcoin ETF. Now, the SEC has expressed concerns over time. They're worried about market manipulation. They're worried about custody. They're worried about broker-dealer arrangements. But the industry has gotten better and better at solving those concerns. We submitted over 200 pages of novel academic research in support of our application. Grayscale has done phenomenal work. Other great firms like 21 Shares and others have also done their own work. Fidelity has done its own work. And we're getting much, much closer to solving the SEC's concerns. The last thing I would say is the first Bitcoin ETF application in the US was in 2013. The market wasn't ready for an ETF at that point. I'm a huge fan of ETFs and a huge fan of crypto. I think the SEC was right to reject it at that point. So they've been right. It's just now, in my view, they're wrong. Now we're past the point where the market is mature enough to allow an ETF. And they should let it go through because it will lower costs and raise security for investors. It'll be strong for investor protections.
Before we talk about the benefits for investors, maybe can you clarify for our audience, obviously the recent development that we had in 1933 approval not versus in 1940 approval, and what does that mean in practice? And what are the practical differences between the two authorization mechanisms?
Yeah, so there are two primary differences, and it's important to think about both. One, the 1940 Act was developed after the 1933 Act, and it has extra investor protections in it. It has independent boards, it has different notification requirements. And at the time that 1940 Act futures ETF went through, the SEC commented that the extra investor protections of the 1940 Act were important. Why does that matter? Because you can't have a spot Bitcoin ETF under the 1940 Act. The 1940 Act is the Securities Act. And we all know that Bitcoin has been classified as not a security. So it had to go through this 1933 Act. So the fact that it went through without the extra investor protections in the 1940 Act is a material change. But the other and bigger difference is that 1940 Act ETFs, sorry to get a bit technical, and 1933 Act ETFs have different approval pathways. 1933 Acts have to go through something called the 19B4 process. And this is the process where an exchange, the exchange where you're going to trade that ETF, makes a rule filing to allow that ETF to exist. And as part of that, it has to demonstrate that there's surveillance mechanisms and other means to prevent market manipulation, or at least surveil market manipulation if it takes place in the underlying market. In the 40 Act, you actually don't have to do that anymore. So there's this whole other regulatory process, which is where every spot Bitcoin ETF application has run ashore, which is this 19B4 process. So the second reason that 33 Act was so important was that it went through this 19B4 process where the SEC had to consider the question of whether the market is mature enough and has surveillance mechanisms to ensure that market manipulation doesn't take place. Now, importantly, the futures market is not quite the same as the spot market. But as you know, Henry, the futures settles to the spot price. So it's not like they're really that distinct. Again, think of it as like getting closer to the end line. The 40 Act was at the 20-yard line. The 33 Act is at like the 5-yard line. And so the question now is, can we go those last 5 yards to get into the end zone? But it is a material difference for those two reasons.
Yeah, very, very interesting development. I think many other countries as well, many other regulators and exchanges will follow that very closely. And who do you think will be the big crypto ETF players in a couple of years? Of course, firms like Bitwise now have been playing a dominant space role in the space. Do you think it's just a matter of time? We're going to see the Vanguards, the BlackRocks, and the other mainstream ETF providers enter the space. And what is really holding them back right now when it comes to some developments on and looking at crypto ETFs?
Yeah. The big guys are already coming, right? Invesco is there. BlackRock has filed. Fidelity just launched like a metaverse ETF with very low cost. I think all the major financial players are looking at crypto. They're looking at $33 billion in venture capital funneling in last year. They're looking at the exodus of talent from Wall Street into the crypto economy. They're looking at the regulatory progress that we're seeing in Washington, and they're recognizing that this is going to be a big deal. So they're all already there, or they're coming. My view, however, and this comes from being in the ETF space, is that in specialist areas of the market, investors want specialist firms. So I'll think of a few examples. In the commodity space, the largest ETF players were US commodity funds and ETF Securities, which was a new startup. In the MLP space, the largest player was Allsanian, right? As you get into these nichier areas where advisors need not just a product, but they need information and education, we've seen time and again that specialist firms often win the largest share of the market. Even in the commodity space, U.S. commodity funds, which was like 10 guys in Oakland, California, raised more assets than Deutsche Bank, which came to market at the same time. U.S. commodity funds actually won. So it remains to be seen whether the big guys will win or whether the specialists like Bitwise and Grayscale and Osprey and 21 Shares, these are really great firms, well-funded, and all they do is crypto 24/7. And you know that this industry moves so fast that it's almost impossible to stay up on it. So I think specialists may be able to win the majority of the market in the ETF space, but for sure, you're going to see Fidelity, you're going to see BlackRock, you're going to see Invesco, because crypto is going to be, it's going to be a $10 trillion industry. And they recognize that, so they're moving in.
So it's a very interesting point. I mean, you mentioned obviously crypto can become a $10 trillion industry. And today, obviously, the AUM that we have in ETFs globally in crypto products is obviously limited. Right now, for example, we have the products in Canada. Australia just announced they're going to have Bitcoin ETFs as well. What is, from a practical perspective, you mentioned this $10 trillion advisor market as well in the US. What is
Yeah.
really stopping US retail allocators or institutionals, or even frankly advisors, recommending people to buy the Bitcoin ETFs on the TSX in Canada, for example, and having one in the US will really materially have an impact in driving inflows on Bitcoin ETFs?
Oh, that's such a great question. The answer is some people do go to Canada and gain exposure. Many people are confused by it. You can't gain exposure to, or it's very difficult for US investors to gain exposure to foreign ETFs that hold companies because they're really negative tax externalities. And as a result, I think people are generally afraid of foreign fund structures. I don't actually think that applies in the case of like the Purpose Bitcoin ETF because it doesn't hold companies. It's a different product. But investors have been educated that foreign products are hard to trade, hard to work into their systems. And there's an added layer of risk. It is important always to focus back on the risk when you talk about the market that we're talking to. The last thing financial advisors want to do is put their client into a product and have something go wrong. That risk is heightened if the US hasn't approved a spot Bitcoin ETF. If the advisor is going to the client and saying, there's no spot Bitcoin ETF in the US, regulators haven't allowed it, but I'm going to give you exposure to one in Canada. Now, if the market goes down 30, 40%, as you know, crypto has in the past, they're more at risk in that scenario. So I do think there'll be a massive unlock. For what it's worth, again, we've seen this. The US is often not first in ETF land. We weren't first in gold ETFs, for example. We weren't first in many other areas. And you didn't see people going abroad. It waited until it launched in the US market. The last thing I would say, to go back to that gold example, another mistake I think people make when thinking about this is it's going to be a light switch. Like a Bitcoin ETF is going to launch and it's going to gather $80 billion in assets. And that's not how it works. It's actually much slower than that. So the gold ETF, as an example, ended year one with $3 billion in assets. It was actually not until like year 5 that it really got up the curve. And that's because it needs to be approved on platforms. Some people have seasoning requirements. Some people take a while to get used to it. So don't think of the Bitcoin ETF approval as like a step function change. Yes, there'll be some initial inflows. The real impact will be felt actually over 3 to 5 years. It's going to take that long, which I know is an eternity in crypto land, and that may be disappointing to people. But that's just the reality of how the ETF market and how product approvals on platforms work and how other issues work.
This episode is brought to you by CoinFLEX.us, the first and only crypto exchange where you can trade with zero fees and earn interest with the world's first interest-earning stablecoin called flexUSD. FlexUSD pays interest on-chain every 8 hours directly into the user's wallet. No staking required. Follow CoinFLEX_US on Twitter and sign up on CoinFLEX.us to learn more today. To what extent, I mean, you mentioned you believe the next bull market can potentially be driven by such a catalyst of a Bitcoin ETF being approved. I mean, when you mentioned there's about 80 billion, in your opinion, that can come into Bitcoin ETFs, I mean, what's your impact on what the impact it can have, not only on the price, but let's say on the broader ecosystem?
Yeah, I think it's really significant. So the flows are important because you're tapping into a market that's currently not invested in crypto. But more important is that it's taking down the last major regulatory barrier. We do surveys of financial advisors and institutions and ask them what's preventing you from accessing this market. And you think it would be volatility, you think it would be a lack of fundamentals, hard to value, a lack of Wall Street research. No, it's a lack of regulatory clarity. That's been number one for the past 4 years running in a survey of professional investors that we do. Lack of regulatory clarity. So it's going to bring investors not just into the Bitcoin ETF. It's going to bring investors into crypto more broadly. They're going to look at Ethereum. They're going to look at Polkadot. They're going to look further down the chain. So I really think as a signaling mechanism is actually the biggest impact. And again, it's an impact that we've felt over multiple years. It's not going to get, $80 billion in assets or whatever that the gold ETF did in a month. It's going to take multiple years for that to unfold. But it's that regulatory switch, right? That removal of the regulatory excuse that's really going to be the game changer.
Do you also think, I mean, when it comes to regulatory switch, of course, regulatory clarity will play a big role, but also the incentives. I mean, you mentioned the big advisor market. Today, if a financial advisor, it's the same, by the way, with private banks, there's no real incentive for them to encourage people to buy into crypto products. You know, in a case of a private bank, they don't make any if they encourage their private bank clients to buy into crypto, these are assets that leave the private bank to go one of the crypto platforms. You think right now there's a right incentive mechanisms for advisors, whether it's commissions and wait for them to get upside financially in potentially in Bitcoin ETFs or crypto products right now.
That's right. It's hard to get paid on crypto allocations as an advisor, right? It needs to, this is very prosaic, but it needs to boil into the statement figure so that they can draw a fee on it. I think that's really important. The way I think of it is like confidence burden. Right now, in order to be a financial advisor and put your client into crypto, you have to be almost more bullish on crypto than I am, right? Your level of confidence and conviction has to be so high because you're taking on certain headaches. Now, there are ways you can do it. Bitwise works with over 800 advisors. So, of course, you can do it in a safe, secure fashion, but you need a really high barrier of confidence and a long-term view. All of these things, the advent of an ETF, the approval, the fitting into platforms, brings that down more in line with other allocations in the market, right? You don't need that level of conviction if you're putting people into commodities or if you're putting people into equities or you're putting people into bonds. But because you have to jump over a higher hurdle right now, you only get the investors with the highest level of conviction. And because it will normalize that process, it'll help bring more investors on board. And we should also point out, it'll lower costs. It'll make it safer. It'll make it more secure. So there are real advantages for investors that'll get introduced to the system once we get an ETF on Bitcoin, and then hopefully on other assets as well, because crypto is much more than Bitcoin, and that's becoming more true every day.
So actually, you mentioned obviously the lowering of costs is obviously one of the biggest advantages for ETFs. I know the traditional financial markets, many individuals, including myself, we just invest in ETFs. And there's a big debate whether active management actually works and beating the market actually is possible in traditional equities with everything that we know today. Do you believe the same theory, let's say, criticism of active management also applies in the field of crypto, and thus why ETFs or passive investment is an option people should consider?
Yeah. Oh, so I have so many thoughts on this. I do think good active managers exist in the crypto market. Bitwise is exploring active in certain directions because it is a newer and in some ways less efficient market than, let's say, large cap stocks. When you look at things like the Morningstar study on relative performance, as you go from US large cap stocks to emerging market or frontier stocks, the share of active managers that beat the market increases. Now, it never gets over 50, right? Most active managers lose, even in the most inefficient equity markets, but it does increase over time because there's more inefficiencies to be plumbed. Crypto obviously has more inefficiencies than US large cap equities. So active is attractive. It's hard to diligence active managers in crypto. They don't have very long track records. People don't know what questions to ask. So I think that's a material challenge. Here's the thing about indexing that I love in crypto. Actually two things. One, the beta of this market is so large. Bitcoin is up, 20 million% over the last 12 years. It's up hundreds of percent over the last 3 or 5 years. The last thing you want to do as an investor is get the theme right and bet on the wrong horse. So for many investors, just getting beta exposure is going to be a very good thing. The other thing about indexing, and this contrasts with what I said about the efficiency, is I think indexing may be a better solution in crypto than it is in the equity market. And here's why. In the equity market, size is a disadvantage, right? Companies reach natural size limits. They run into antitrust issues. They run into market limitation issues. Crypto's not that way. In crypto market, size is an advantage, right? Why is Bitcoin the most secure crypto market network in the world? Because it's the largest and it has the largest mining community, it has the largest value. Why is Ethereum moving to proof of stake going to be more secure than a smaller blockchain moving to proof of stake? Because there will be much more money at stake. There will be billions of dollars at stake, not hundreds of thousands. So size is a fundamental advantage in crypto. And as a result, a market cap weighted index in crypto is almost like a smart beta strategy that's focused on a factor that works. In fact, the only other academically proven factor in crypto that works is momentum, and momentum is linked to size. And so you're almost doubling down. It's like a research affiliate's approach to crypto would be a market cap weighted index. Now, I do think there'll be active managers that outperform. I think as you get into smaller capitalization where price discovery is less certain, that's particularly attractive. I think in the VC space, enormous gains to be had. But I do think market cap weighted crypto will be, I don't know, 30, 40, 50% of the market because it's such an effective strategy. And right now, one of the reasons I love working at Bitwise, we're the largest index fund manager in the world. We manage $1.5 billion in assets, which is great. That's real money, but it's such a tiny fraction of the market. That's not going to be $1 billion market. That's going to be a much larger market because it's just a fundamentally attractive way to gain exposure to the greatest beta that any of us have lived through, and a beta that I think still has 10 years plus to run before it reaches something like an asymptotic top, right before it's fully mature. So I'm pretty excited about it.
Very interesting. I think your market weighted approach as well, and you're right that there's a big the momentum has a big role to play, and I totally agree when you say that for especially a lot of the smaller coins, you move out of the top 10, top 20. There's so much market misinformation, frankly, opacity, right? Whereas you would not find this in traditional equities market. The kind of the Morningstar or ETF.com model that we have, the data that is available is not there yet. And actually, on this point as well, Matt, is what is your view on, obviously there's a lot of comparisons, and you mentioned before as well with gold, right? When we look at, is Bitcoin the digital gold? But when you look at correlations, right? There's obviously a lot more correlation, not only with gold, but also let's say tech stock or, more assets are, risk on from that perspective. What is your view on the correlation of Bitcoin and crypto assets more generally? And how should investors look at them? Is it more of a risk-on asset? Is it a risk-off asset? And what role should it play in their portfolio?
Oh, it depends on your time frame. This is such a hard question because we're mentally set up to put things into specific boxes. And the answer to your question is crypto is a risk-on asset in the short term, and on the long term is a non-correlated asset. So the way I think about it is, of course, crypto is a risk-on asset, right? If people are pretending to be surprised that crypto is risky, they haven't been paying attention, right? The market has had 70% drawdowns. It's historically been extremely volatile. Of course, it's a risky asset. Its value lies primarily in the future, so the discount rate you apply will dramatically change the price today. Of course, it's a risk-on asset. And so when the market goes dramatically risk-off, you see that affected in the price. But there's kind of two drivers to crypto prices. You have the risk-on, risk-off sentiment as an overlay driver, and then you have the fundamental secular trends taking place in crypto itself, right? User demand, technological upgrades, regulatory progress, etc. Those are not correlated in any way with the drivers of the equity market, right? Whether Janet Yellen changes her tune from not liking Bitcoin to thinking it has an important role in the future, which just happened, has nothing to do with whether Tesla will be successful or not, right? They're just fundamentally different. What I think happens in the market is in normalized markets where we're not having big risk on, risk off swings, these secular drivers determine the pathway of crypto. And that's why over long periods of time, if you look over a year, over 2 years, over 3 years, crypto has very low correlations to all risk assets, below 0.2 typically. But occasionally you have this macro shock. And then all that matters in the market is what's risk on and risk off. And you see this in stocks. Like, why is Tesla down? Is it because demand for electric vehicles has gone down? Of course not. It's because we're in a risk-off market. So this trend can overwhelm these secular factors in the short term, but in the long term, the secular factors win out. That's what the data says. And I think that's what logic says will be in the future. The challenge for investors today is we're in a market where those macro factors are so prominent, right? We have a new Fed regime. We have a war in Ukraine. We have inflation that we're wrestling with, that they're bullying the fundamental factors. But over the next 3 years, will crypto be highly correlated with equities? No, I don't think so, because the fundamental factors are going to be more important over the long term. So complex answer, but it's a complex question. And I think that's really how the market is playing out.
This episode is powered by Celsius, your home for crypto. With Celsius, you can easily buy, swap, earn, borrow, and send crypto all in one app with zero fees and the best rates in the industry. Get crypto-backed loans starting at just 1% APR with no origination fees. You can even swap coins in-app without paying gas fees or worrying about slippage. For non-US users and US accredited investors, you can earn yield on 40 plus digital assets without staking. And if you need help, you can call them and get live support from an actual human. Visit the link in the description to get started today. And what about crypto equities? I mean, unlike a couple of years ago, now we're having increasingly traditional listed stocks that are crypto related. Not only the Coinbase of this world, blockchain.com just announced there, it was reported, they're talking to numerous players for a potential listing. And there's obviously at least over 15 or 20 listed crypto mining stocks right now. What's your view of investors wanting to get exposure to crypto via some of these listed stocks? And what do you think the outlook, or let's say, how is that pool of potential stocks people can buy will grow over the next couple of years?
Yeah, I'm really excited about this because so many people are uncomfortable owning crypto directly. This is a way to own the picks and shovels behind crypto. And you're right, there's actually about 30 pure play crypto equities in the market today. Companies that derive at least 75% of their revenue from the crypto market. And as you mentioned, there's this sort of wave of companies coming public. Blockchain.com is one example, but there are 45 crypto unicorns. They're all going to be moving into the public market over the next 2 years. So it's not going to be 30 stocks, it's going to be 70 stocks. I think what investors should understand about allocating to crypto equities is three things. One, they're highly but not perfectly correlated to the price of Bitcoin. The correlations tend to be about 0.5 to 0.75. Typically, they're a little bit more defensive, right? So you don't get quite the juice that you get in Bitcoin directly. You get that tamped down. That's one thing. You get a little bit of a relative defensive position. Now, they can go down a lot. Crypto is very volatile, but compared to crypto assets, they're a little bit more defensive. But here's one interesting thing about them that gets me really excited. If you look at companies like Coinbase or you look at crypto mining companies, they trade at relatively contained valuations. Their valuations tend to be, at least on forward earnings, below the S&P 500 average or on the S&P 500 average. But their revenue growth rate and their profitability is extremely high, right? Coinbase's profit margins are something north of 40%. They're extremely high. So it's very rare to find fast-growing companies that trade at normal valuations that are extremely profitable. Usually they're fast-growing and they're losing money, right? That's what we're used to. And these are fast-growing and making enormous amounts of money. And I think people are discounting them because they assume crypto is so cyclical and they're discounting the future price of Bitcoin aggressively. I have a sort of gut feel that the market may be mispricing these and over discounting them and sort of the expectation that crypto prices will fall back to $10,000 a Bitcoin, which I find, possible, but extremely unlikely, and certainly equally likely that they'll go up to, 70, 80. They'll mirror that on the upside. So I find it an interesting market. I think it may be mispriced. I think the reason it may be mispriced is because there's an absence of buyers. Like crypto people want to buy crypto and equity people want to run away from crypto. So crypto equity is it doesn't have a home. And that may be an interesting opportunity for some people that have a long-term view.
Exactly. Also, I think there's a lot of, from a relative value perspective as well, some interesting opportunities there as well between these crypto stocks and the crypto assets directly as well. You mentioned one thing, Matt, which is I think very interesting. It's kind of the discount that people are applying to some of these assets. I need to mention, you mentioned Grayscale before, but GBDC, and I don't know how comfortable you talk about this, but let's obviously now GBDC at the time we're recording this is trading at a premium of over 20%. What do you think is what do you think is driving this? And what do you think is the outlook of products like GBDC when you look at the broader, let's say, passive exposure to crypto?
Yeah, sure. GBTC, Bitcoin only. ETH is also from Grayscale, Ethereum only. Bitwise has BITW in the same format, which is an index-based product. I can talk about the space generally. I won't talk. Grayscale is a great company. I'll let them talk about their products, but talk about the space generally. The thing that connects all of these OTCQX quoted shares is that there's no ongoing redemption mechanism. And as a result, they can trade to premiums or discounts that the fund issuer cannot control or predict. Grayscale, as we know, has talked about converting GBTC into an ETF, which would eliminate that discount. Bitwise had said for itself, once it's possible to do that with our index-based product, we will follow that pathway as well. So it really, the question I think for investors is, do you expect that to happen, and when do you expect that to happen? Because that will normalize the discount process. Until then, investors buying these need to know they could trade to a giant premium. They could trade to a much deeper discount. They're effective and easy ways to gain access in a brokerage window, but they do have that sort of closed-end fund factor, which exists because you don't have a redemption mechanism like you do in an ETF.
Yeah, I think it's going to be very, very interesting to follow in what's going to happen again if there is a conversion to an ETF eventually. One other thing I want to discuss with you, Matt, is the kind of the role, the differential role that index providers or crypto ETFs can provide to the ecosystem. We had on the show, for example, recently, Alex Mashinsky from Celsius, and they were talking about the giving back, where some of the profits that some of these intermediaries are making, giving it back to the consumer, for example, right? One thing, for example, I've been a big fan of the ETF role of Vanguard, which really tried to actually lower fees, lower costs, and give back in a way to the clients and users and people that are investing in their products. What do you think is going to be, do you think we're going to have the same Vanguard type of mindset in the crypto space, or when it comes to crypto ETFs, as kind of it's aligned more with the ethos of decentralization and crypto more generally?
Oh, that's a great question. I think right now crypto companies are thinking of giving back to the ecosystem by investing heavily in education. So as an example, here at Bitwise with my director of research, we wrote the CFA Institute's Guide to Bitcoin, Blockchain, and Crypto, which was a way to try to educate professional investors about this space. I do think over time, particularly with the entry of ETFs, you're going to see prices come down. But I do think companies in the space will continue to take some of that money and invest in education because we're in that education intensive period of growth. Eventually, particularly with Bitcoin, it'll be deeply commoditized and extraordinarily cheap. Other crypto assets will get there, but further out. But for a while, I think you're going to see companies trying to invest heavily in education. I think Vanguard, for what it's worth, has done more for investors than any other fund company in the world. I'm a huge fan. I own a bunch of Vanguard funds. I love its sort of mutualized model. I think maybe we'll get there. An interesting question to get a little crypto native is, could you organize an investment DAO that embodied the Vanguard characteristics, right? Vanguard is sort of like a proto DAO, right? Where the company is owned by the shareholders of the fund, which is unique in the fund industry. And I see some distant analog, this would make Jack Bogle roll over in his grave, but I see a distant analog between that mutualized structure and the experiments we're seeing in the DAO space and we're seeing with things like Index Coup. And I wonder if that's how it will evolve and if that will become 10 years from now, a primary tool for asset management, not just in crypto assets, but once we have digitalized securities and other things. So that's where I see the Vanguard connection is actually into the DAO space. I don't know quite what it will mean, but I bet there are people who are working on it, and I'd be interested in watching it and seeing how it evolves.
It's a very interesting, actually, connection there. I didn't think about that, actually, but you're absolutely right. Right, from a mindset perspective, there's a lot of similarities there with DAO models that we're seeing today. The other thing as well, and we really run out of time, and my producer is going to kill me right now, but one other thing I really want to ask you is, I was doing the research, and by the way, your guide for the CFA Institute is excellent. When I teach, I've been teaching crypto now since 2015. I totally agree, by the way, with your arguments on education. This is something we need to do more as well as an industry. But actually, I recommend all my students, it's in my mandatory reading guiding, actually, the report that you wrote there. So thanks again for your contribution to not only academia, but also to the education space. It's an excellent report, by the way. I highly recommend to our listeners who will learn more about this. It's one of the CFA Institute publications. But one of the things when I was looking actually for my next book that's coming out in a couple weeks, is I was doing a review of a lot of ETFs, and I found what was very interesting, some of the ETFs that tried to address some of the issues that a lot of institutional investors had. I mean, you mentioned before one of the ETFs in Canada that has a carbon offset share class, for example. What do you think is going to be the future of, let's say, ETF products that tailor to such, let's say, niche or potential issues that investors may have, and what are the similarities we may find in traditional ETF markets that we can learn from?
Oh, that's a great question. I think you're going to see two kinds of experiments, both in the crypto asset market and in traditional markets. I do think those sort of carbon hedged allocations are going to be an important part of how institutions allocate to Bitcoin specifically, right? Bitcoin is the big carbon intensive crypto asset. Ethereum, as mentioned, is moving to a more carbon neutral approach. And institutions have to care about carbon and other ESG issues. Now, I'd add, outside of the carbon footprint, which I think is somewhat overblown, there are many ESG benefits to crypto. So I think if you can neutralize them, you'll certainly see that. Look, what we're going to see in the ETF space, we're going to see low-cost ETFs. We're going to see higher-cost ETFs with more services. We're going to see ESG ETFs that differentiate. I bet we'll see ETFs try to compete on where they custody crypto assets and maybe distributing that custody around multiple parts. You're going to see as many shots on goals as you can imagine. But for sure, if you're serving the institutional community, they're going to ask you a question about ESG. And so carbon hedging is a big piece of it. The other thing, and this is more meta, that we're seeing in the traditional asset management industry is potentially all indexes moving in an ESG direction. You see what BlackRock is doing in terms of enforcing corporate governance. I think you're going to see that sort of pressure evolve in the crypto industry and pressure how everyone gets exposure to the space. I don't know exactly how it will play out. And again, I think the concerns about Bitcoin's carbon intensity are overblown and would fall apart if they were analyzed carefully. But I do think you're going to see, as institutions become a bigger player in crypto, more focus on that element, because that is an important thing for them to check. And it's something that they always check in the diligence phases.
No, it's excellent. And I think this is one of the dilemmas I was having. Are investors just becoming more comfortable? Like you said, some of the ESG concerns are overblown, and I totally agree with you. And in many cases, it helps ESG actually in many regards. And actually, there would not be that much demand for such niche share classes and stuff. But I guess time will tell on that perspective. Talking about time, Matt, we're completely went over time, but it's such a lovely conversation. I think it was very interesting. My lovely Bella is with me here with us today. So I'm asking Matt quick questions. I need 1 or 2 word answers, and the Bella's here to actually keep us honest. Are you ready?
I'm ready. Ready.
Hey, let's rock and roll, man. Here we go. What is the one advice you would give to anybody who's starting in crypto?
Hold for the long term.
What is the one crypto CEO that you find the most impressive? The one crypto CEO that outside of Bitwise that you find the most impressive?
Brian Armstrong.
Of Coinbase. What is that?
He's done more to onboard retail investors than anyone else. And now you're seeing him do it again in the NFT space in a really innovative way. And one time lucky, 2 times impressive. And I think we're seeing impressive with the NFT application. I think it's going to be a very big deal.
Excellent. What is the one book about crypto you recommend people to read? One book or website or resource?
Outside of my own, Into the Ether, I thought was great. You need to understand where crypto came from a sort of psychological perspective, and it does a great job with those characters. I recommend it to all new employees at Bitwise.
If you had to make a bet, is Satoshi a man, a woman, and what country is he or she from?
I have no idea. I have no idea. I'm going to pass.
Matt, what do you do on your weekends when you're not busy in crypto ETFing?
Yeah, I go to 27 sports games with my 3 kids: soccer, baseball, track. I'm like an Uber driver going to sports games.
Oh boy. Well, if this is an interesting one. If you could hire one hedge fund manager or traditional financial services manager as an intern, who would you love to hire?
As an intern. Oh man. Wow, that's a tough one. It'd be really great to pepper Ray Dalio with questions. I love the idea of Ray Dalio as my intern, by the way. I'm going to hold on to that one.
You never know, and maybe it'd be good if you guys can swap books as well while you're out there. And last question, Matt, again, it was a pleasure having you on board on the show today. Matt, if you could have lunch with one person, dead or alive, lunch or dinner with one person, dead or alive, who would that be?
Oh, man. Lunch with one person, dead or alive. Who would that be? That's a really tricky one. I'd say my mom, who passed away 10 years ago or so. I'd love to have lunch with her.
Great answer, Matt. It was Matt Hougan again. Thank you very much for being with us. Matt, where can people find you? Where can people learn about you or Bitwise?
Bitwiseinvestments.com. You can sign up for our monthly letter or find me at Matt_Hougan on Twitter. And just so you don't miss me, Hougan has a U in it. It's Hougan. That U trips some people up. So find me on Twitter.
Like you mentioned at the beginning of the recording, it's like Hulk Hogan. So you go. That's a good way people not to forget that. Again, guys, thank you very much for being on the show today. Again, if you like the show, make sure to click subscribe and give us a 5-star rating. It really helps actually with more people discovering not only about the show, but learning about crypto more generally. Again, if you like this topic, make sure to follow me on Twitter, on LinkedIn. But also, if you have friends who want to learn about crypto, make sure that, one option could be my latest course on Udemy, where we just surpassed 1,000 students in less than 4 months, where I cover in 90 minutes, and that was a challenge, all the developments you need to know on basically on Bitcoin, Ethereum, stablecoins, DeFi, CBDC, Web3, and the course is called Introduction to Bitcoin and Crypto Assets. So hopefully this was a useful course, and also make sure to check out my YouTube page that is now available in multiple languages, in English, French, Spanish, Arabic, and Chinese, where there's a lot of available educational information on crypto for free in multiple languages, again, contributing to education in the space. Thank you very much, everybody. Thank you, everybody, for listening. And Matt was great. Thank you for being with us today on the Future of Money podcast. See you, Matt, and see you, everybody. See you guys soon.